Art, you're not alone in liking the small cap index, and yet, a lot of people come on this show and they say we really like small caps because they're going to be beneficiaries of those lower rates that the Fed is delivering. And yet, when you take a look at yields, they remain elevated. And in fact, benchmark yields are higher now than where they were when the Fed started cutting rates back in September. So are the small caps really going to be beneficiaries of so-called low rates?
Yeah, that's such a great question, Mandy. And I think when you think about the things that are tailwinds for small caps, I think that certainly the lower rates would be a tailwind, and certainly the environment of higher rates for the last 3 years has held small caps back. I think a stronger dollar in a real sense is a beneficiary to domestically focused small caps. When you think about the fact that half of the S&P 500 does business, makes things in dollars and sells them in other currencies, whereas only 20% of the Russell 2000 small caps does that. I certainly think that a lighter regulatory touch, especially around M&A, would be a positive for small caps, because there really hasn't been a lot of mergers and acquisitions over the course of the last 3 years. So those are some of the tailwinds. But to your point, Treasury rates are higher than when the Fed started cutting and has cut by 75 basis points, but they've come off their highs, and I think that the path of Treasuries likely comes down. I think with that comes the borrowing rates for most small caps. They borrow on a short-term variable rate basis, and I think the path of rates is likely lower, unless and until we get to a place where inflation doesn't continue its path lower. The last mile has been very stubborn to get to the Fed's 2% target, but I certainly think that with 100 basis points that will likely have been taken down in the Fed funds rate this year with their meeting next week, and then maybe another 50 basis points, I think the Treasury curve starts to respond to that, and we'll likely see lower highs and lower lows as we work our way lower on the 10-year.